Welcome to the Trading Bell Show. Now, Absa Bank Kenya released their full year 2022 results. I'll be sitting with Yusuf Omari, the interim CEO, to unpack the numbers and get to know what is in it for you, especially the shareholder. Yusuf Omari, welcome to the show.
Thank you so much.
Great to have you, and top of mind, first of all, I must say your promises came to fruition because last few months when we were analyzing Q3, some of the promises you spoke about, especially to shareholders, have come to fruition, and you have some news as well for them. But first, let me commend you for your 22-year full results. I've seen sustainable revenue growth, momentum across all segments, growth 25% to 9 billion. I'd like to just hear your reactions, how you feel about this.
No, to be honest, really exciting moments when you're able to go back to your shareholders with a stellar performance that we've just released. Mm-hmm. I think we are coming off some very difficult times, especially during the COVID period. Yes. Where there's a year we did not declare dividend, mm-hmm. but then today to come and declare dividend, which is 23% up. Yeah. I'm sure if you're a shareholder, wherever you are, absolutely, you must be smiling. Yes. Because of the kind of stellar performance we've been able to release today.
Excellent. And of course, speaking about the shareholding, which is 23%, as you said, back, let's talk about your stock as well, which has outperformed your peer-listed banks as well. What's the news now for the shareholders, especially now on the specific dividend that you've talked about?
Yeah, I think for us, whenever we look at our shareholders, there's a bit on the dividend they're getting, mm-hmm. which of course is a direct return to how much they've been able to invest. Yes. But also fundamentally is also when they look at the appreciation mm-hmm. of the stock. Okay. And when we started this strategy, mm-hmm. that was 5 years ago, mm-hmm. We used a base of our pricing at that point in time. Mm-hmm. And today, looking at the share price for Absa, it's actually picked up 28%. Wow. So if you're a shareholder, you're not only looking at the dividend which is going to come to your bank account, but also looking at the capital appreciation that mm-hmm. you've been able to gain over that period.
And maybe on that note, we could as well address potential shareholders that are considering Absa Bank in itself, and just speaking about your franchise value. And today you talked about your book valuation, which is quite on a stable rise, currently at 63.6 billion. I'd like you to endear a shareholder who will be saying, Absa, is it time to think about it, looking at all this and the numbers? What's your comment to them?
I think for me, when I look at shareholders, and especially for our stock, I always encourage long-term shareholders to come and invest with us. Mm-hmm. Because if you are looking at this stock 5 years ago, you would say, maybe it's not the right stock to invest in. Mm-hmm. But then if you are a long-term investor, today you're happy because you're getting a very good dividend return, but also getting a capital appreciation. Mm-hmm. But that aside, mm-hmm. I also look at even if you're a short-term investor, we are among the banks that is giving the highest dividend yields in this market. Okay. Consistently giving a dividend yield of above 10%. Mm-hmm. So you as an investor, you are literally saying, even if you had money to deposit in an account, relative to then investing in our stock, mm-hmm. you're actually saying, I'll still be able to get my return. Absolutely. And tied to that, of course, then there's an additional incentive, which is a capital appreciation. Sure. So my message to potential shareholders is this is a stock that you should definitely be thinking about.
All right. Yeah. I'm keen to address this because your shareholders are not shielded from what is happening around. We have the monetary policies, geopolitical conflicts, I think drought as well right now in the country. We're happy we're seeing some showers of rain, and of course capital flight, which is happening as well. How have some of these factors had an impact on your book?
Yeah, no, I think to be honest, last year we had quite a number of headwinds. Yes. The geopolitical risk, which still continues up to now. Yeah. We're just in an anniversary of that, of the war between Ukraine and Russia. Mm-hmm. So that is still with us. We're still seeing challenges with the FX because of the huge imports we are still doing, again tied with the political risk. And of course what you've mentioned in terms of the drought situation. Yes. I think the sentiments going forward is that all of it is going to be contained.
Okay.
The price of oil, we started seeing it coming down.
Yeah.
The government is playing a big role in managing inflation, in managing, our debt to GDP ratios. And with that, if I look at, for example, January, for the first time we started seeing the inflation coming down.
Yes. Yeah.
So government taking the right actions in terms of controlling debt, in terms of removing the subsidies which were not, sustainable going forward, encouraging the farmers, even as we're expecting the rains to come, with subsidies on fertilizers. All these are the right things, that an economy requires for it to be able to thrive.
Wow.
Now we look at our different categories of customers depending on what they're doing. If they are importers, there is of course the challenge on FX because of what I've already mentioned.
Yeah.
But then we are now encouraging the exporters to come through. We're encouraging the partnerships which the government is running with.
Yes.
In terms of reaching out to countries that we can be able to work with.
Okay.
And to be honest, the economic outlook is quite positive. And it's just a matter of time for us to see a turnaround.
Excellent. Let's talk about your strategy. And, what I must say, it's working because it's growing. I think that's the first comment that I can put across. You as well, when I looked through your books, must probably be having a plan on how to grow your non-funded income, and diversify its earning. For example, when I looked through the books today, the non-funded income, total income, is a bit lower than industry average. What's your plan on this?
Yeah, I think our non-funded income, I must say, again, within the strategy that we've picked. A few years ago, there are quite a number of lines on non-funded income which were not there. I'll give you a good example. Bank assurance is an area where we were not participating in. We've managed now to get into that business, and today we are making over $1 billion shillings, just coming from a line that was not there before. We've moved into wealth management. We've moved into stock brokerage services. We are now moving even into custody business. All of these are lines that were not there before, and now we can see they're coming through. The issue now that we need to do for the next horizon of our strategy is to push the execution so that now we start gaining market share on this line. I must say on the NFI line, year on year, it's actually picked up 17%. So there's some small element, I must say, why you're looking at when you're comparing our unfunded income to total income. It's more of an accounting because the revenue we make from digital loan, it's a short-term loan. It's actually needs to be repaid within a month. And for that reason, all the revenue we're getting from that line, we have reclassified to net interest income. So if we had stuck to what we reported in previous year, then we'd actually even have seen a bigger growth on the NFI line.
All right. I'll be coming back to speak about just a little bit on some of your initiatives. I have seen you've diversified a lot. I would like you to comment on just the performance of Timiza and, just a bit of your impairment provision. First, we take a break. We're right here with Yusuf Omari, the Interim CEO Absa, and we'll be right back to answer some of the questions that I've just highlighted. Welcome back to the Trading Bell Show. We are speaking to Yusuf Omari, the Interim CEO at Absa Bank, helping us break the full year results 2022 and how they exceptionally did what they did with the numbers. Welcome back, sir. And I would like to ask you about, based on your performance still, on how some of your products are doing. I'd like you to give a comment. How is Timiza doing? Because it's quite a brand that is known out there.
I think Timiza to us was an excellent product, which allowed us to reach a market segment that we were not participating in, which is really the mass market. And I must tell you, within the first year after we launched the product, we were able to push our customer up by 5 million. Who are now within the Timiza platform. And if you look at the Timiza platform, it has quite a number of services in there, not just on the lending side, but also we have introduced insurance products, saving products as well. And I must say we have seen a significant uptick. During the time of COVID, there was a challenge at that point in time. But if I look at last year, we've seen a significant jump. on the revenue, the performance of the Timiza, product.
Yeah.
And I must say, if we look at the government agenda in terms of supporting, the Hustler Fund, Timiza is actually a mirror of the Hustler Fund, because it's actually targeting, the youth, targeting, businessmen who would want to borrow short-term working capital and be able to repay. So if you look at the way the product is performing,
yes,
you take a facility and within 30 days you repay that.
Excellent.
And when I look at the performance rate, the clients who've been able to extend, facilities on Timiza, it's really picked up very, very well.
Okay.
Yeah.
I know you forgave a lot of, let me call them sins, from some of the people who owed you, courtesy of what the government aligning with government agenda. I think you'll comment on that. But on top of that, you're also quite bullish when it comes to SMEs, and have seen the numbers, the engagements, the growth in terms of the revenues that you put in there. I don't know what you're looking at, but maybe you'll highlight on that, and as well as what are your key findings in engaging with these SMEs?
Yeah, I think to be honest, we partnered with as an industry, the banking industry,
yes,
in terms of supporting the government agenda, and His Excellency the President, when he requested we relook at the whole of that. Mass market that was borrowing, using digital channel.
Yes.
We came to the party, we played our part. We were able to delist about 396,000 customers, and not just delisting them, but also giving them, a 50% waiver of the amount that, they were owing through the Timiza product.
Okay.
I must say that is working very well. The sentiments have been picked so well by these 396,000 customers.
Yes.
And we are seeing quite a number of these customers now. They've come back. They're starting to, to repay their loans. And with that, of course, then we are now able to extend them, more facilities. We're introducing them to other products. And I'm hoping that, the investments that we've done is really having an impact to many households.
Yes.
Because 396,000 is just the individual customers, but you can imagine a household with maybe 3-4, people. The impact that this could be having. Absolutely. Tied to that, on your question on SME. Yes. That's a big focus area for us. SME in this economy, they drive 50% of our GDP. You're right. They create 80% of employment. So it's a sector that you can never ignore. Okay. With their unique challenges where we need to create capacity in terms of financial skills, helping them to, to assess markets for their final products, and of course also helping them in terms of linking them with coaches, people who have been in their respective businesses, they've been successful, and we are reaching out to them and say hold their hands and just take them through their business cycle. We've gone to the counties, we've met quite a number of customers. Just the last quarter, we were able to meet about 10,000 customers, creating all this capacity. And one thing that we've picked as a challenge to these clients it's got to do with the business they're doing with the counties. Yes. So when you talk about the unpaid bills, that's a big area. Okay. So just for me to reach out, which we've already done with the different counties, is to remember them. Okay. And to make sure that, as they do business with them, to be able to meet their obligation in terms of, all the bills they are raising, because these are services that have actually been done. But apart from that, a team that, to be honest, a sector that we have seen double-digit growth rate. You're right. In the last 5 years, year in, year out. Wow. And really looking, if you look at our strategy going forward, it becomes a major focus area for us to be able to serve this sector. Absolutely. You're almost preempting my almost final question to that, but just before we get to that final part of it, I'd like just a general comment on some of the figures that you spoke about. I picked some of the areas that were quite keen. First of all, I looked at your cost-to-income ratio at 41%. I would like to know whether that's healthy from your end and what you feel about it. Of course, and loan loss ratios at 2.3%. Someone may point out and say, is this really okay? Is it a balance that you feel from where you sit that is fine with it? I think just quick comments on that, and I'm sure people will be able to at least get to understand on overall look how the numbers are. Yeah, I think really impressed with our cost-to-income ratio.
Okay.
We started at 5 years ago, 55%.
Yes.
This has come down with the numbers we've reported today to 41%.
41%.
Our strategic goal is actually for it to be around mid-40s. So we're already beating, our strategic goal.
Yes.
But what that tells you is that then we have an appetite to invest.
Okay.
So when I mentioned we've invested 2 billion last year in 75 projects, it means we can still be able to continue with that momentum for the next strategic period.
Okay.
That we've just begun. So a good area to be.
Yes.
And it's a very simple mantle that we follow, where we say if I'm giving you 1 shilling to invest, which comes under the cost line, then you should be able to generate 2 shillings on the revenue side.
You're right.
So a very simple mantle. When I look on the side of risk, our loan loss ratio is at around 2.3%. Really, same level with what we had pre-COVID period. It was around 2.2.
Yes.
And when I look at our strategic, targets on loan loss ratios, is bang on around there, all the way to 2.3, 2.5%.
Okay.
Which then tells you have an appetite to lend.
Okay.
And in there you realize there will be some loans that will not be performing.
Okay.
But then you have an appetite and you've been able to price for that.
All right.
I think for me the one that is coming through, just to conclude on the loan loss ratios, is risk-based pricing.
Yes. In fact, I wanted you to mention on that, yes.
Yes, so risk-based pricing is a key area for us.
Yes.
Because in the past, when we had to lend, up to a maximum of 4% above the CBR rate, that now has been lifted.
Okay.
What that does to us is to say, the sectors that we had ignored because of their risk profile, now we can be able to reach out to them. And when you reach out to them, then it means you price for risk.
Okay.
And then in the other sectors where we've seen some very good performance, those clients, then we should be able to extend to them the benefit because of their good risk profile. And that's really where risk-based pricing is heading to.
All right. Quite some good sentiments there. Towards the closing now, your overall strategic initiatives, now we're looking at this 2023 and what you're looking at and expecting projections in terms of revenues, profitability. What are you looking at?
I think for me, we look at our strategy holistically under the 3 arms that we mentioned today.
Yes.
We have a big retail segment where we are focused on the affluent. We must win on the affluent front.
Okay.
We have the middle core that we've been serving over the year. We are very comfortable in that area. So it's to continue with that momentum. And then the new area where we've spoken about mass market, the youth, those become our key priorities.
Okay.
So that's on the side of retail.
Okay.
We move to business banking, which is where we have our SME. We have an appetite for that area. We're going to invest on technology to make sure that we can be able to service these customers in the right way and the most profitable way.
Okay.
We are investing in scorecard, which will help us to do risk-based pricing, help us to, to target specific clients based on their business performance. And of course, in there, we are saying we're not just going to be using bank statements. The SMEs have been known to use different channels. They get paid using different channels, and we want to bring all of that data when we are looking to service these customers. And the last one is a corporate and investment banking. Okay. That is an area where we've seen opportunities. We've invested in the state-of-the-art, transactional capabilities. We have a tool there. We're using a system called Absa Assess. The corporate clients who are using that, they are really, really excited. Ours now is to execute and get new to bank, new customers on that area. But more fundamental with our corporate business is the entire value chain. Where we do ecosystem, we bank their distributors and their suppliers. Then with this, of course, they have the employees, including the corporate. Then we can also be able to service this. Okay. So ours really, we are quite optimistic in terms of our momentum. Yes. We did extremely well last year. We hope we can be able to continue with this momentum in this year. And when we'll be releasing our Q1 results, you will be able to see. Again, I'm telling you, same thing I told you last year. Yes. You'll be able to see this momentum continuing even as we progress.
Wow. We can't wait, and we wish you well. We had shareholders there giving amazing sentiments on what you are doing. By the way, you're concerned about the dollar pressure. Is that in any way a concern to your end as well?
Dollar pressure?
Yes.
Our dollar is, we know the root cause on the dollar.
Okay.
We know what the regulator has done.
Okay.
We are playing our part. If you think about it today, 35 to 40% of our import bill is oil.
Oh, yeah.
We need to address that.
You're right.
And then that is on the demand side.
Yes.
On the supply side, on dollars, we also need to support our exporters. So with the drought situation, if that can be, if the rains come, our farmers can be able to get their produce, they'll be able to export.
Absolutely.
With the political situation in the country, elections is behind us, we can be able to bring, tourists. That we'll be able to address on the supply side.
Okay.
So it's just a matter of time.
Okay.
Yeah.
Thank you so much for your time, sir.
Thank you so much as well.
That's just about it with the interim CEO, Yusuf Omari, right here, speaking about Absa's performance 2022. Very good news for the shareholders, as you can see, and he's quite bullish, talking about how this year is going to be. We shall be having this conversation in Q1 to see whether they have lived to the promise. They have done it before, and probably they will still do it now. So congratulations to the bank, and of course to the entire leadership and management. Thank you so much for your time right here on the Trading Bell. I leave you now with the markets.